Can you believe it? Since I made this video, Celsius went up 50% in just 43 trading days. Today I will show you exactly how I picked that winner, why I just sold, and more importantly, what stock I bought with all that money. Quick reminder, I share what I'm doing, but always do your own homework. This is just entertainment, it's not financial advice. Let's start with a quick recap. On January 29, I published a video where I analyzed 6 soft beverage companies. Check it out. We have Coke, Pepsi, Dr. Pepper, Monster, Celsius, and Fizz. Which one do you think is the best deal? Can you guess? To pick Celsius, I just applied my value ratio. It's similar to price to earning ratio, but with 3 factors baked in: owner's earnings, growth, and risk. The winner was clearly Celsius, with a value ratio of just 14.7 and a fair price around $40. This was just crazy good. We just needed a small catalyst to change the sentiment, and after Celsius announced its acquisition of Alani Nu, the stock jumped 70% in just a few days. It wasn't an easy ride, the market always tries to freak us out. Celsius jumped 50% around earnings, only to crash back down 1 week later before climbing again. This is even more remarkable because at the same time I held this position, the S&P went down about 10%, so our stock is up 50%, the market is down 10%. Super sweet, this is how we beat the market. So, what did I do? Believe it or not, I just sold my whole position. First of all, let me just say, I still believe Celsius is undervalued today. The price now is 35.5 and I sold a bit under 37 on April 1st, right here. We haven't even reached fair value yet. Celsius has very good momentum, it held incredibly well last week. So why did I sell? 2 reasons. First, while Celsius was going up a lot, other great companies were falling sharply. Just a few examples. HIMS is down 65%, Nvidia almost 40%, Robinhood 50%. You get the idea. My valuation system is very clear. Right now there are simply better opportunities. Celsius value ratio is around 21 and is still around 10% undervalued, but there are other companies trading at half their fair price or even less. If I can get 50-70% discounted blue chip, it's way riskier to hold Celsius around fair price. The second reason is portfolio balance. During the last months, I had 2 mid-cap positions, one in Celsius and a huge second position in Abercrombie, but with ANF I'm down big. Due to these crazy Vietnam tariffs, the stock dropped around 30% since I bought. If you want to know the whole story, check out my video, it's a very sad story. I want a more stable portfolio, so I need to diversify it a bit, but right now selling Abercrombie seems impossible to me. It trades at $73 with a value ratio of just 7 and a fair price of at least $160. I believe this company could double from the current price, I just have to be patient. Exactly like I believed Celsius would double when it traded at $21. Might take some years, but I believe it will double. So I can't sell Abercrombie, especially because of these tariffs, is just too cheap. So to balance the risk, I decided to buy a mega cap stock and sleep well at night. With the Nasdaq down 21%, some of the Magnificent 7 are quite cheap, while others remain expensive. Let's have a quick look at the biggest of all, Apple. It's the highest market cap in the world, bigger than Italy's GDP. And when I was scripting this video 3 days ago, Apple traded at $225 and now it's already at $188. I wanted to say how overpriced it was, now it's already much cheaper. For me, it's still expensive. Apple's price to earning is 29 and growth is just 5%. By the way, similar growth as Abercrombie at 5 times the price. And okay, I understand. Apple has a very low risk score. I give it a 2 out of 100. Incredible moat, but still very little growth at a premium price. On the other hand, consider Google. I already talked about Alphabet in this video, check it out. But now it's trading around 18 times price to earnings, half as Apple's almost, but growing twice as fast. Plus, Alphabet owns Waymo, YouTube, Waze, Fitbit, DeepMind, and of course, Google Search. Sure, it's slightly riskier than Apple, but they have a fair value of $230. Currently, it trades 30% below that peak, but I believe it will go back to all-time high. So, I sold my Celsius position and I bought 200 shares of Google, aiming to ride it at least at 230 or even higher. I admit other Magnificent 7 got my attention, Meta and Amazon for example, but as a YouTuber I just think it's appropriate to own Google, and at least in this way, even if I'm far from channel monetization, at least I gain something from all those ads. So here is my portfolio with Alphabet and Abercrombie, but to diversify, I actually bought 5 more companies as well. I will reveal my portfolio and all my position in the next video. If it's already published, you can watch it here. If it's not, please subscribe, hit the bell, and you will be notified as soon as it's available. Thank you for watching. Peace out.